All right. Good morning, ladies and gentlemen. I hope you guys had a great night. And good morning, Coach Julius. I trust you equally had a great night. So, welcome to another brand new day of a daily morning class where we tend to share knowledge and skills on how to win better in the crypto sphere, especially as a trader. So, today, I would like us to look at something new. We're going to discuss something new. But just before we can dive into that, I would like us to have a reflection and relate from our first class when we were trying to build a background to this very class, especially on a session that I was going to be handling, just like I'm doing today. I believe you remember very well, for those who were part of that class, when we started this morning session trained by me, by myself. I believe you remember very well that we did look at, just a minute, we looked at something like this, just a minute. We're looking at, okay, when we introduced technical analysis, we said in an attempt to have a proper view of the market and then make uninformed decisions with regards to whatever you want to do in the market, we have what we call supportive tools. We have people who have been in the game for quite some time who designed tools to help and simplify our work as a price action analyst or as market analyst. So we have about 6 support tools, and these 6 support tools is subject to a decision that you can make as an individual to select 1 or 2 or even all, depending on how comfortable you may be. And then you try to improve yourself or perfect your skills in them. And I said on that very day that it's up to you to choose a strategy that you're going to be employing to analyze the market. We just give the information, then you decide on which strategy to choose or which tools to use. Okay. But there are about 6 tools that can support your analysis. One, we talked about the trend line, of which we just completed a session yesterday with regards to anything to do with trend lines. Other details, you can carry on and continue learning from different sources and leaders. Here we are to give the basics. Then we have what we call the chart patterns. Now, especially with the chart patterns, if you're going to be that trader who is going to be basing on the chart pattern or in certain formations of the candles, in terms of shape or pattern to trade, you can as well look deeper and then see how best you can what? You can perfect those strategies. I believe you've ever come across or you've ever heard people talking about head and shoulders, the triangle pattern, the wedge, the rising chant, the wedge, the falling wedge, is what we call the butterfly. There are a lot of chart patterns that some schools of trader have actually mastered And for them to trade, they only go on the chart to look out for those specific pattern. And once they form or once they sight them, it's good to go. For them, it is well with them to make an informed decisions on whatever they want to do in the market, just by entirely depending on the chart pattern formation. But then they also have some schools of traders that narrow their mind into just analyzing the behavior of traders within a particular time frame as illustrated by the candlestick. Now, also we believe from the previous class and as we're going to look on in our next class, after handling whatever we're going to do, there are specific candles that also help in signaling the behavior of traders in the market. And by signaling, it helps you also make informed decisions. We have specific types of candles. Once we set them at a particular point of the market or on the chart, it should be in position to help us know what is happening in the market or what is most likely going to happen in the market so that you prepare your mind for what you will do next. Okay, and there are only two options, either to remain and be patient a little and not to jump in the market in case you find certain candle types formed on the chart that may not favor your decisions to enter the market. Or if you were in the market, you can decide to say, okay, because of this candle that is trying to build up, there's a likelihood that maybe the market is going to go this way. So if I was in the market and I see it is going to go in against me, I would rather exit. Or if it were in your favor, then you enter the market or stay longer in the trade. So there's some candles that we are going to look at that really help in signaling, giving us a lot of information regarding what is happening in the market with regards to the behavior of traders. Okay? I believe you've heard about the shooting star, the hammer, the dragonfly. We have like the gravestone dojis, and so many other types of candles that have significances when it comes to interpreting the market. Okay, so we shall look at them in details at a later time. The harami, you know, the three soldiers. There are a lot of those candles. So also we have groups of traders who entirely or may not entirely depend, but at least use most of the time, the the technical indicators, the indicators to make informed decisions on whatever they want to do in the market. Okay, so some people will just depend on the on indicators. Yeah, they may do a little bit of price action, use maybe some trend lines, but most of the time they bend or they become biased in mind and rely so much onto the indicators to make decisions on whatever they want to do in the market. So those groups of traders are also there, and I believe that's where most of the traders here in Royal Q rely on so much, if I'm not mistaken. People want the easier way. People want things made easier for them, which is also still fine. For as long as it works for you, it is okay. Okay, it is okay. So we have the indicators, and there are a number of indicators, and it is what we're going to look at today, the indicators specifically. Then we have some groups of traders who entirely depend on the fluctuation in volumes of different assets that they would like to trade to make decisions. Yeah, the people who have mastered that art and science so much in that by seeing a specific volume of a particular cryptocurrency, they're able to tell that either we have buyers flocking into the market to buy that particular asset, or people are in the selling mode, okay, or there's a selling sentiment going on, so they will keep off from the market. But when they see an increasing volume, on a particular coin that they would wish to trade, then that gives them a good signal of course also doing the bandwagoning, joining the team, and then trying to ride and take advantage of the rising volume. Because when the volume rises, obviously it means people are doing something in the market. If it is decreasing, it also signals something. So they have a way of that they'll master that art so much, and they basically use the volume. Now, ladies and gentlemen, as of today, I want us to look at this fourth part, the technical indicators. And that is the part we're going to look at today. Okay? All right. So, on the technical indicators, we have indicators grouped in various ways. Okay? These indicators are grouped in various ways. We have what we call, just a minute, we have what we call the volume indicators. We have what we call the trend indicators. Then three, we have the momentum indicators. Now, I may so much narrow my mind onto maybe two. Okay. So when you talk about volume or trend or momentum indicators, we simply mean that there are specific indicators that has been designed to help us, analyze the volume of a particular asset. And then there are those that have been designed to help us identify the trend of the market. Yeah. And those designed to help us, have an insight on what the momentum is like in the market with regards to a particular coin. Now, there are some of these indicators that may just be specifically and singly with one of these, and there are others that may have a combination of this embedded in them. And because of that, I'm going to start with one indicator that we shall look at in details as we go on our chart. And that is the stochastic RSI, the stochastic relative strength index, whose work or operation seemingly is the same as the relative strength index. So the way you can use the relative strength index is the same way you use the stochastic relative strength index. The difference comes in their name and in identifying some zones. Okay, that's where the difference comes in, but the mode of operation is the same. So you can base on the two to give you whatever picture, whatever you want to have in the market if you decide to use them, the relative strength index and the stochastic relative strength index. So I'm going to begin with one, which is the relative strength index. And allow me go and share my screen and we go practical. Okay. Let's go practical. Bam. Okay. So let me just see here. Okay. All right. Okay. So let's come here. The market is bleeding. That is good. No problem. Let it bleed. Let it bleed. There are some people who fear bleeding markets. Anything that is red, like a curse. But this is just a build-up of what is going to happen shortly. Yeah, I believe most of us keeping up with the trends of events or the current affairs or what is happening or trending in the world of politics. And Trump is just on his way to the White House soon. And about some of the data released yesterday, I think Trump is one of those people who has been so parallel with the current SEC chairman. And there's a couple of people who tend to cause a lot of problem to us as traders, who tend to cause a lot of Instability in the market. Before you know it, the market is down. The moment the market is up. So there has been parallel with most of them, and there's a likelihood that some of them may be replaced. Yeah, because some of the information they come out with really affects the market so much. And I believe even with those who trade forex. So Trump wants to put things right, which will be a positive news to us. So let's just wait for what happens. But for the moment, let's just trade with margin calls. I believe, I so much believe that it's gonna be nice. It's gonna be well. It's really gonna be well. Mm. Just like if you remember what I told you, that normally when the market dumps so much, it quickly finds a way of stabilizing. And this is what is most likely going to happen here. It really quickly finds a way of stabilizing, at least the first, gains by the retraces midway 30, 40, or even 50 or 60% after a serious dump. So we believe this one, sooner or later, you're going to see most of these coins again back to green, and and you will make money again. Okay, so that's not what we are here for. Let's go into what we're supposed to do. Yes, we should do this. Let me hide some of this, and then let's go here. Okay, so the indicator we're going to talk about, or we're going to look at today, is called Stochastic Relative Strength Index. Okay, now the Stochastic Relative Strength Index, just increase the size. Increase its size. Okay, now the Stochastic RSI, which is this is what we're going to look at, the Stochastic RSI. Now it's an indicator that is basically used to identify two things or three things. One is that it helps us to, first of all, identify the trend of the market. So meaning it's equally a trend indicator, right? It helps us in identifying the trend. The second thing it helps us to do is that it helps us to identify uh, an oversold and overbought region in the market. So it helps in telling us whether that coin has been oversold or it has been overbought, of which this information helps a lot in making decisions with regards to entry and exit in the market. Okay, and we're going to look at that in details. Now, first of all, this stochastic RSI, like in appearance, this is how it looks like. It consists of three horizontal lines, okay, with the lower one, if you go by the default setting, the lower one is at 20, is at actually 0.2. If you convert it into percentage, it is 20%. Okay. Then the middle one is at 0.5, or if you convert it to percentage, it is at 50%. Then the upper line is at 0.8 or 80%. Now these lines are called bands, with this upper one being called the upper band, this one being the middle band, and then the lower one being the lower band. Okay. So it consists of three bands running horizontally, each of them attaching itself onto the different values or percentages. and there is a significance. That demarcation, it is split into about 4 regions. Okay, split into 4 regions. There is a region above the 80 because it must run from 1 to 0, or what we will call 0 to 100. So within the 100 movement in market price, there has to be zones portioned, okay? And whose portioning helps you in actually making decisions, because it will be signaling something if these lines here are within specific zones. So we have the 3 zones, majorly the 3 zones. We have this zone above the 80% band, and then we have this zone below the 20% zone or band. Then we have the middle part. Okay, we have this middle part between 80 and 20. Okay, now this moving averages or lines, which is the orange line and the blue line, tends to make their movement within these 2 areas, within the upper zone and the lower zone. It will never go below the lower zone, neither will it ever go above the upper zone. Now, there's a significance into this. What happens is this: on the stochastic RSI, we have these 2 lines. These 2 lines, one is called the K line, and then the other is called the D line. The K line is actually the signal line. It is what you base on to make decisions. So you have to make a closer look onto how it is making its movement. Yeah, it's actually the signal line. The D line is the momentum line. The momentum line, sometimes you may also call it a line that shows divergence between the current price of that coin in the market and the previous average price. Okay, now that technicality, don't worry about it. Okay, the most important thing in a simplified way is that it has these 2 lines: the K line, which is the signal line, and the D line. Now, the K line is in the default form, blue in color. Okay, blue in color. It is the line that you see here, blue in color, and then the D line being the orange line. Now, I'm going to show you how you use them. Okay, to look out for trade entry opportunities or exit opportunities. These 2 lines move in between these 2 zones. And depending on the zone they are in, there is a significance to each of them. The zone below is what we call the oversold zone or region. You can call it the oversold region, or it is called sometimes as the demand zone. Why oversold, or why the demand zone? It is an oversold region because once these 2 lines are within that oversold region, it simply tells us that that coin has been oversold. Okay, and because it has been oversold, it literally means that the price has dropped so much significantly, in that it is presenting opportunities for traders to buy. That's why it is called the demand zone. That is the period where the coin is going to begin being on a high demand. Why? Because the real reason behind the mind of every trader is they want to buy at a cheaper price. They want to buy low. They are looking out for opportunities of buying at the lowest price. Okay, so that by the time the price begins rising, they are riding in profit. Okay, so when the 2 lines are within the oversold region, the significance of that is that the coin's price has dropped so much, and it's the best region for entering the market should you come across these lines within the region, okay, it is the best opportunity for buying because the price would have really dropped so low. It may stay there for a while. However, however long it may stay there, just know the price is low. You will soon be riding in good profit if you're patient. Okay? So the oversold region or the demand region is actually the best for making trade entry. So if you're using this indicator and you find the lines has dipped within the oversold region, that is the demand zone. Please make trade entry opportunity. I mean, make trade entries. Okay. You may not go wholly, but at least you can put in a greater percentage of your fund and then reserve some so that as it is maintaining, it is still keeping within the region, you can still take advantage and buy a little of some of those coins because it may not mean that actually the price has now dropped and it is not going to drop any further. No. And I'm going to show you what indicators you take advantage of when the lines are within the oversold region. What should give you confidence that this is the best opportunity, this is the right time to enter? I'm going to show you. There is something that happens within these two lines, okay, that will give you the confidence. Then when the lines are within the overbought region, because this is called the overbought region, once you see the line has entered the overbought region, what this simply means is that the market price of that coin has risen so much, and it is a characteristic of pumping coins. It has pumped so much, it has gone so much in percentage, in that even the traders who entered midway the trend are willing and ready to begin taking off profit, including those who entered at an earlier time. That means they would have accumulated good percentage. And what happens? If you're a trader, you trade to make profit. So people are going to begin taking off profit. And the effect of begin taking off profit is that it results into the market price dropping. And sometimes it can drop significantly and it can dump, especially if the coin has been overbought, if the price has overpumped, it can drop so badly. Why? Because people are taking off profit. Okay? People are taking off profit. Okay? And because they are taking off profit, it means people are going to begin releasing the coin back into the market, flooding the market with the same coin, resulting into the price dropping. So the overbought region is also referred to as this is also referred to as the supply zone. Supply zone, in my entrepreneurship class, we used to study about supply and demand. Supply and demand. When something is in surplus, what does it mean? When something is in high demand, what does it mean? Especially in relation to the price. It should be important to also remember or recall that either commerce or entrepreneurship. In Uganda, we used to have commerce and entrepreneurship, but seemingly the same same subject, but it was split into two. But regardless, that was the term we often used: supply and demand, even in economics when you go to A-level and university. So you should be by now understand what these two terms mean. Why would something be called surplus? So here, the area above the 80% band is called the overbought or the supply zone. Supply zone. This is a point where people will be supplying the coin back to the market. Individuals who held the coins in their respective wallets, because with sports trading, you own whatever you bought, right? So if you begin releasing it back to the market, that means you're flooding the market. So you are supplying people in the market. And if all of you begin supplying the market, what happens? The price drops. So that is simply, in simple terms, that's what it will indicate. Or that is what it would mean. So that having been understood, I'm gonna now show you how you make best use of these lines, these two lines that run zigzagly. this zigzag line, these lines here, this movement of these two lines. I'm going to show you how you can make best use of it to make entry in the market. Okay, so up to that point, let me know. Are we still together? Let me know on the chat. Are we still together? If we are not together, you also tell us we are not together so that you can leave. If we are not together, you can tell us also so that for you leave, because that means you are not together with us. So, are we together? Okay. Yeah, if you're following, that's okay then. So there's no one who is not together with us. Are you together with me? Am I together with you? Are we together with us? Okay. Okay. Yeah, that's fine. Okay. Okay. All right. So let's go back. Let's move. Let's move. Let's move. Let's move. Let's go back. Let's get back. Let's get back. Let's get back. Oh. So coming back here, I'm gonna begin by showing us how we bring this indicator on the chart, right? So let me first remove this and show you how you can bring it on the chart. All right, so when you open your trading view, you have this, you have this icon here. You know, trading view keeps on updating some of these icons and how they appear. So, but I believe you're familiar with this. There is the pencil, which of course takes you to the drawing tool, but then there is this one here, which is like an adjustment icon. You tap on it. When you tap on it, it will bring you to this interface, you know. Then you'll be heading to this part written indicators. Okay, indicators. And then once you tap on indicators, it will take you to another interface. Depending on the frequency of your use of your trading view, sometimes it will bring you here. So when it brings you here, you're going to come to this part, the technicals. When you tap on technicals, you will be presented with series of indicators, series of them, numerous of them. Okay? Yeah, so numerous of them. Okay, so what you would have to do is just to come to the search area. Just come to your search area here. Okay, and then you will type the name of that particular indicator which you want. So in this case, we shall have what we call, you will just write stochastic RSI, and it will appear. Okay. Now, we may have different stochastics, but the one we're interested in is just stochastic RSI with that, you know, some of those other details. So if you find it, which is this, you will have to put it on your favorite. You will have to put it on your favorite list because it is an indicator that you will be using frequently. Other than coming all the time to look for it, if you put them on your favorite list, it will be easier to find. So to put it on the favorite list, you will just tap, you see the stars? There's a star normally before the name of every indicator, all right? So you just tap on that star, and once you tap on it, it is going to have, you will have a shade. The background will be shaded in yellow, okay? Once it is shaded, that means it's already on your favorite. So then you tap on the X to exit, okay? Now, if you want it, just come there, indicators, and then you come to favorite, and then you look for it, stochastic, and it is here down. You just tap on it once, and it will be loaded on the chart. Just tap on it once, okay? And in the process of tapping it to ascertain that it has been added on the chart already, if you tap on it like this, you will sometimes see that, you know, it will have a gray background form. It will have some grayish background color. You just tap on air. So it will be added like this. Now, about the settings, there's really no much adjustment made on the stochastic RSI. Most of the times we tend to use them in their default form. The only adjustment you may want to make or that you may make is with regard to the colors of these moving averages, the colors of these moving lines, these moving averages, and how you would want it to appear, how you would want the bands to look like. If you want them thicker, you can go and increase the thickness. If you want them in terms of a line other than a dash or a dotted line, you can go ahead and do that. Okay? Yeah, so those are the only adjustments I may recommend that you can make. Okay? Yeah. About the percentage of the bands, I advise let it remain the way it is, because if you make so much of an adjustment, then to me it will make sense depending on really what you want. But when you have it at 80%, it gives you a gap of 20% in which you are to monitor the market and see should the moving averages go into those 20%, either above or below. It should now be in position to really tell you that the market has either been oversold or overbought. So you have to make some informed decision. But if you adjust then, let's say, to 90 and then 10, you never know. It may give you false information, yeah? Sometimes it may not be the best guide you. So if you want to make those adjustments, just double tap on the indicator, double tap on it, and then there's nothing you're going to do so much on the signal line, okay, or the K line, especially on the input. You will also not make any adjustment there. You will only come to the style. It is on the style where you can decide to choose a color for the different moving averages for the signal line, and then this other momentum line. So, and also you may want to increase, you may want to increase the thickness. Sorry, you may want to change this into either a line with breaks. But the most important thing, if you tap on the color will help you, will bring you to an interface where you can decide to choose the thickness of the line and then the color itself. To me, the thickness of the line is okay, unless maybe I want to put it on the second one, okay? Then I do the same for D, put it on the second one. Maybe for the D, I can even change it to red, okay? Yeah, so those are the only difference. So for the band, you don't do so much, okay? You will not do so much for the band, okay? You want to do so much for the band. You won't do so much for the band. Okay, so don't do so much for the band, so that it's a minute. Okay, there we are. So you don't do so much on the band. The upper band, you'll keep it at 80. Maybe you can only change the color or how you'd want the line, the line style to appear like, whether you want it in a dashed, a dotted line, or you want it as a full line. That is up to you. I can change it to a dotted line, then I increase the thickness to the second one, and then I maybe maintain the color. I can make the color to be red. Okay, let me put it orange. Okay. The middle one, I can as well make it be dotted. Then I put it maybe to be, okay, black. And then the lower one, that's the lower one, sorry. The lower one, I can keep it to this color. And then this, yeah. Then the middle one is the one I can put in black, that, and dotted. Then after doing those adjustments, for you to retain those settings or adjustments you've made, simply come to the three dots at the bottom left corner on that very same page, and then you tap on it and set it as a default. That means you save as default, sorry. So if you tap on save as default, that means whatever your adjustment you've made will be captured and recorded. So when you go back to the chart, that is how the chart will look like. Where's my middle line? Okay, let me make it white. There we are. Okay, so that's how it will appear. Okay, that's how it will appear. So we have that. Now, ladies and gentlemen, for you to make, remember yesterday we were saying that sometimes you may not base on only one tool. You can use your trend lines, but then at the end of it all, you want to increase the level of your confidence by having certain confirmations also from other sources or from other tools. So if you can use a combination of trend line, or what we call support and resistance, and then maybe with the combination with the stochastic RSI, it will make more sense to you. Yeah. Now, to use the stochastic RSI, you follow up on the movement of these moving averages. The K line, which is of course the blue line, and then the D line, which is the red line. The K line is the signal line. Now, best trade entry opportunities are presented when the K line crosses over and begins moving above the D line. Best trade entry opportunities are presented when the K line, which is the blue line, crosses over and begin moving above the D line. And it becomes even more best when the movement is in the direction of an uptrend, right? Yeah. So that is what happens. So when a crossover happens, and then this will be the kind of movement that you are most likely going to see. When the market when the market is on a downtrend, the red line or the K line will normally run above the K line. The D line will run always above the K line, right? Like we are seeing here, that the red line, which is the D line, is running above the K line. That is a downtrend movement or a downtrend market, okay? But for an uptrend market, the K line crosses and begin running above the D line, like we are witnessing here. It is the same thing that has happened here. It's the same thing that happened here. So you realize that here a crossover happened, and then the blue line started running above the D line. Okay, the blue line is now running above the red line. This is the K, this is the D. And it's all pointing towards A. So for you to enter the market, you have to wait for a crossover to happen. When a crossover happens where the K line crosses over the red line, and it points upward, okay? And the K line begins running above the red line, just know that market is on an uptrend. It becomes even more interesting if you find this crossover within the oversold region. But even so, even if you find it within this region, it is still okay. But it may be more deadlier if you find the crossover has happened here, because it can also happen there within the overbought. That will be a trap. That will be a very big trap. The blue line can cross over the red line above above this zone, or within the zone, or what you call the overbought zone. But that would be a trap. It will be short-lived. Okay, it may not be the best for you to make entry. Okay, so let's go practical now. Let's go practical. This is 4 hours time frame. Let me go to 1 hour time frame. Where is my chart? Where is the chart? Okay, here we are. I want us to just try to witness what happens when a crossover happens on the stochastic RSI. So let's begin from here. I want us to see what happens when a crossover happens on the stochastic RSI. So normally, let's begin from here. You see, initially it was a downtrend, as you can see. Then the market price dipped slightly closer to the oversold region. Then a crossover happened, meaning the K line crossed above the red line. And in this point here, the K line started, moving above the D line and on that direction. Okay. Okay. So what happened then? Look, this is where the crossover happened, and then thereafter, this happened. When the moving averages entered the overbought region, this is the peak of what happened there, and it was indicated by that inverted hammer. And an inverted hammer is a selling pressure candle. It is a candle that shows you that the price, sellers are building pressure in the market. And anytime the market is going to go on a downtrend. So that signal alone should also tell you something if it corresponds to the moving averages being within the overbought region. It should prepare your mind. It should prepare you for an action, okay, to exit the market. So after, when the crossover happens here, where now the blue line is crossed over by the red line, okay, and then the red line begins riding over the blue line, the direction changes. Okay, so the direction changes, okay, like we have seen here, okay? But again, when a crossover happened here again, we saw that. That is what happened. That there was a crossover, then what followed was a good movement. So in simple term, what this means is that you should only make trade entry opportunities if you want to use the stochastic RSI. Look for a point of a crossover, or look for a point where there's a likelihood of a crossover happening, especially where the trend was previously down and now it is on the verge of having an upward movement. That is the kind of crossover you should be looking out for. A crossover where the K line wants to move above or wants to cross the red line. That is where you make entry from. That is where you make entry from. And to make entry, this is what you do. I'm going to come live here. This is where we are. I'm going to use a live. Okay, here we are. But now, you see this kind of crossover which happens near the overbought region. That is a trap. It's a very big trap. It can be a very serious trap. But nevertheless, let's use that. Let me just use this. Okay. So when you're going to use this, let me demonstrate using this one. Here, I want to demonstrate something so that you can apply that when you're analyzing it in real time. This is a 1 day time frame, right? That is a 1 day time frame. Now, at this point of a crossover, this is the point of a crossover. Let's assume we came close, we identified this part. That was the point of the crossover, right? When the crossover just happens, what you're going to do is this. Go to your drawing tool. Now, some of these things you can do it, you can now do it visually. But for practical purpose, let me show you what happens normally. If you pick a vertical line, put it exactly at that point of a crossover, right? So you realize that it has touched the other candle, the green candle there. It has touched that green candle. So what you're going to do, demarcate, find your horizontal line, put on the low of that last candle, that's where the reversal happened, okay? Just put it there, right? Now, that line is going to help you establish a margin call drop, just in case. Okay, the market tries to go slightly or dips below your entry point. So what you're going to do, you're going to do that. Now, at the point of the crossover happening, wait for that candle to close. Wait for that candle, which is corresponding to the crossover point. Let that candle close. Then make entry make entry on the next candle. Make entry on the next candle. So in this case, you would make entry at this, from the next candle here. Just let's wait for that one to close. Then you time the next one. Once the next one opens, what you're going to do is you're going to make entry. Measure that distance down to this line. The percentage you get there is margin call drop. I am teaching a beginner. I'm teaching someone who wants to apply a principle of trading. Yeah, that sometimes we tend to ignore these things, but that is it. So just make entry. In the next candle, immediately the next candle opens, make entry. From your entry point, measure that distance to this is your support. Okay? Because that is the point where the reversal happened, and it is corresponding to, it was in the build-up of a crossover happening on the stochastic RSI. So it becomes your support. So that in case you make entry there and the market tries to dip slightly, should it come to your support, you are safe. The robot will buy again. And you know the effect of buying. That means the average price would be moved closer to the current price, and the level of floating loss will be reducing. If it was a little bit, let's say at 2%, it may reduce to either 1 point something. That is an effect. At least the floating loss will reduce. And the little the floating loss, the quicker you get out of the market. Yeah. So you make entry there. Make entry there. Make entry there. Okay. Then from this point here, okay, look out for the most recent swing high. Look out for the most recent swing high. When I talk about the most recent swing high, that point where there was a reversal before reaching this point here. That means the market went up and then it reversed before dipping to this support level, which in this case would be this. This is the most recent with regards to our entry point. This will be the most recent swing high, right? Just simply draw your line there. That becomes your resistance, right? Now, at whatever point you're going to enter, if you enter from the next candle, keep your eye here. That will be your take profit. Does that make sense? Does that make sense? Does it make sense? Does that make sense? Fast. Don't worry about the time frame, but does it make sense? People are so much into time frames. That's the most important thing. Does it make sense? Because remember, regardless of whether you use the very same time frame or another time frame, the truth of the matter is trading is not entering and you're out. It's not entering and then you're out. No, there's a moment of waiting. So, irrespective of the time frame you enter at, please have that at the back of your mind. There is a moment of waiting. Even if you go to a lower time frame and enter from that, there is a moment of there's a moment of waiting. There is a moment of waiting, unless maybe that coin is pumping, like the volatility is so high. Yeah, but under normal market situation, there is a moment of waiting. Make entry, wait for what happens, because you're not the only person in the market. You as a trader, first of all, imagine the capital you're using. You're a small capital trader. Completely. You ride on the back of those, what we call the institutional traders, those who are able to move the market, those who have big capital, in that they put they put like one trade entry and the market moves. For you, you are riding on their back. So don't assume you just want to enter and you're out. No. It doesn't happen like that. It doesn't happen like that. We don't have fake crossovers. No, there is no fake crossovers. It's either a crossover or not. It is either a crossover or not. It is very visible. There's nothing like fake crossover. It is either a crossover or not. And most of the times, the best is, let me come back. Let me come back. Let me come back. Let me come back here. Let's go to reality. I'm going to come here. Let's now come to real thing here. Let's come to the real thing. We are going to do this live. Now let's come here. Do we see this? What is happening here? We're on the verge of a crossover, right? Here, right? We're on the verge of a crossover. So, but there is a crossover that happened, right? And we're going to pick this line. Let's just do that and we see. This is where the crossover happened, right? Here. It's on that candle that the crossover has happened, right? It appears the crossover has happened and the market was on the verge of going down. But there's a likelihood that something is happening here. It's about to cross over. It's about to cross over. Not until we see the blue line touch the red line, we are not going to make a mistake of entering the market. No, no, and no. If you're so much eager to enter, you go and look at the lower time frame, what is already happening. Because by the time, in a higher time frame, like 1 hour, the crossover is about to happen. In the lower time frame, it would have already happened. So if you want to make trade entry, now this is for that person who was saying which time frame. If you cannot wait for this crossover to come into a reality, go and check in the lower time frame what has happened. Has it crossed over or not yet? And if it has crossed over, which kind of crossover? Is it where the signal line has crossed over the D line, or it is the opposite? Let's go there. We see that? Do we see that? That the crossover happened already, right? But the market is not certain because here we're seeing a bend towards the red line again. And we may see something like this. So we're not very sure. But then the best thing is for you to enter this market and basing on this crossover that has already happened, because in the higher time frame, there's a likelihood of that happening. It's simple still. You can make entry on this very same time frame. I mean, on this very same candle that is building up, or you wait for the next candle. But first of all, look at the point of crossover, right? Look at just the point of crossover. Let me do that. Look at the point of crossover like that. Okay. Sorry. That is the point of crossover. And this is the point of reversal, right? When the market came down, we had that. So this is where we're going to demarcate our first support. Let's do this, put there on the wick of that candle. That is where the support is. And then the next thing is we're going to look out for the most recent swing high. And the most recent swing high would be this with regards to that movement. Because you see, there is that movement that brought about this, the crossover. So there's that movement. And as a trader who is patient, who knows that there's entering and then a moment of waiting should be there, you wait for this candle to close so that you see the behavior. But if you decide to enter at current price, this will be the margin call drop. Then enter there. Okay, enter there. And then take profit to this point. Okay, that is, take profit to that point. Now, should the market price dip further below the first support, this is your second support area. That is where that will be the point of, you'll have that another 1.5% drop. The robot should buy for the second call. Why I'm doing this? Because here there's a clear and good indication that within the lower time frame, the price of this coin is within the moving averages is within the oversold region. It is in the oversold region, so people are taking out chances. Why? Because now if you go to the higher time frame, the picture becomes very clearly of what is about to happen. There's a likelihood of a crossover happening. So it is showing you a slowdown in what was previously a downtrend here, if you can see, what was previously a downtrend here. This is an indication of a slowdown in momentum and it means that the other group of traders are preparing to, so should a failure swing happen here? Should we see a failure swing? A failure swing? Failure swing? A failure swing is an event that happens where you anticipate the market price to come and retest a particular level and it doesn't really reach there, but it just comes and stops midway and then it makes a U-turn. And in this kind of movement, this is the kind of movement we expect, right? Right? We expected the market price to come to this point because this is our support, right? The price came like this, The price came like this and it was supported around this region. Now it went up, okay? And it is pulling back. We expect it to come to this support. But in case it fails to come to this support and then stops midway and then makes a U-turn to maintain this trend, we call this gap, we call this scenario a failure swing. Okay, no, I don't know whether it's making sense anyway, but that is it. So should that failure swing happen, that means whatever we have seen here is true, is really real and true, and it is what is going to happen. But if a failure swing fails to be formed, then that means this can be a downtrend. That means we are most likely going to see, that means we're most likely going to see the red line maintaining its movement, okay, above the blue line. But the most important thing is just look out for a crossover. I must tell you this is the last statement I'm going to make. Never force anything when you're making analysis. If you come across a chart where, if you're basing, for example, the stochastic RSI, okay, let's look out for entry opportunity. If you find that the trade is not in your favor, you find out that it is really not making sense, or you're struggling to find entry, leave that one, leave that coin, leave it, wait for when a clear entry opportunity presents itself. Just go to another coin. Please, that's the last statement I'm going to make. Don't force anything. Yeah, I want to enter this coin. I love it so much. It really gives me money. I'm dying with it. You be there. You die with it. You'll be dying with it. It will go against you and then you would wonder. You'll forget your surname. Okay? Don't force anything. If opportunity is not presenting itself, come on, relax. Leave it. Hey, they talked about this coin so much. Elon Musk is is a fan of this coin. I know he will pump it. You be there. Just go to another coin. Go to another coin. Go to another coin. Go to that one which will give you opportunities. In fact, even go to those other lower coins like this one. Just go to those coins whose price has dropped significantly. Yeah, those are the coins. Like now this one here. This is good. This is a good one. Okay, these are coins that are not in ROIC. Okay, let me pick another which we trade in ROIC. Let's, for example, go to STP. Now this is a beautiful one. A beautiful one. Look at what is about to happen and look at where the moving averages are. Very much in the oversold region. Very much. And what is about to happen? A crossover is building up. What happens then here? Sorry. Let me just trying to pull this thing. Now, these are the things we say. You don't force anything. Just look for those one which will not stress your mind, like this one. Like this one is a good one. What is about to happen here? A crossover is building up. A very beautiful crossover after a long downward movement. As we can see, this dump caused a very big drop. The market price moved almost from 100%. Now it is tending towards zero. And that is a very good opportunity presenting itself to buy, to enter the market. Because first of all, we are within the oversold, or what we call the demand zone. Now, just like you're also eyeing at making entry here, all the different schools of traders who, based on this stochastic RSI indicator to make entry, to look out for trade entry opportunities, are also doing the same. Now imagine me having a mind of entering, another person, and then from somewhere, everyone combined, we make entry. What are we going to do to the market? We're going to move the market, right? Simple, simple. So like in this case here, I can go and say, okay, I think let's look for the trade entry opportunities, earlier trade entry opportunities. See here, a crossover has even already happened. It's already happened a long time. But I may want to take advantage. So I'm just going to do this quickly, demarcate this part. Okay? Just then look out for the most recent swing high. With relation to my entry price, I'm going to look out for the most recent swing high. I can decide to use this, or I can decide to use that. Okay, that. So meaning simply, if I am a current price or trader, I will make entry there. I know I will drop this to this point. That is just in case. In case it fails to go in my favor immediately, and it first misbehaves by, dipping a little, there's no problem. That will be my margin call drop. But then I can decide to take this small percentage of 1.5, or I can decide to wait, take this from this point. I can decide to take this percentage here. Because I know from the look of what is building up, when this crossover happens, I will not help but enjoy that percentage. It will have to come to pass. Okay? Because if I am to base on that big one, that means my most recent swing high would be that. And let me put it as a different color. Then this would be my support. Because what is happening here is a crossover is happening. Hey, this one here is building. So the only thing I am supposed to do is, by the time we're going to go to the next candle, that means a crossover would have already happened. Because if you can see here, yeah, so we have this. That means the crossover will happen on this very candle, which is still on. Okay, so that means I'll make entry on the next candle, and that will be what will ascertain the crossover. So that means I will use this as my support. Okay, that candle, I'll use its lower wick corresponding to the crossover point as my first support. Make entry at the opening of the next candle, take profit up to there, drop to this as my margin call drop, first margin call drop. Then I look out for the next support point to establish my second margin call drop. Okay, then this would be for my third margin call drop. So I am covered. Okay, so I have this using the wick of this one here. Okay, as the second support. First support is here, second, and this is third. So you have a maximum of how many percentage? Sorry. Have about, from, if you enter there, from whatever the opening of the next candle that will form, you have that, then you have this, then you have that, roughly about 5% drop. Just in case. That is just in case. Yes, the market goes against you. You're covered. But my aim is this percentage here. This one here. Because there was serious dump, I expect a market correction. So I expect a rise to about 50% of this distance. Yeah. So to be safer, I can even take 3/4 or even half, because the percentage is big. I don't want to be greedy. From any point that you'll make entry from, you'll take somewhere midway. Okay. That is if you're basing on the same time frame, given given what is about to happen here. But if you base on lower time frame, that is what we are supposed to do. The one I showed you, that you're just going to base on that. That's how you would do that. Okay, you would just make that kind of measurements, and then you'll be good to go. You can take the 1.5, with a call drop of 2.19, or you can even take it up to 4.3%, as long as you're going to be patient. It will deliver. Trust me, it will deliver. But in case it goes against you, you also have those different price levels where the robot will be buying. Okay, because it's a measurement that you would have already made. Okay, so that is briefly how you gain confidence and trade the stochastic RSI along with the trend line, or what we call support and resistance. As simple. Did it make sense? I know if I was talked, I don't know. Yeah, if you don't, if you fail to, yeah, you can still have a chance to learn more. Have a chance to learn more. Okay, I already said crossovers that happen within the overbought region is a trap. Don't do it. And in case crossover happens within the oversold region and the market doesn't move immediately, there's what we call price delivery algorithm. There are 4 stages. There is what we call accumulation, or what we call market consolidation. Then there is wait, okay. Okay. There is what we call price delivery algorithm. You see, by the time by the time a price moves to a certain direction, people begin by accumulating position. That's why we call the first phase in market and price delivery algorithm being what we call the accumulation phase. Everyone is accumulating position. There is that last position, there's that last quantity of the coin that will be bought that is going to trigger a movement to a particular direction. Or there's that quantity of coins that, if sold, is going to trigger a drop in the market price or a movement to that downward direction. So there's the first phase, which determines the direction of what the market is going to look like. So it is called the accumulation phase, right? The accumulation. Then the second one is what we call the expansion. Now, expansion happens in either way. Now, this is not okay. That's a free lesson now. But let me just let me just do this. I don't know whether I should talk about it. Okay. Or it may not confuse, but I don't know if it may not confuse you though. But it's okay. Let me leave that. But I hope the lesson, the area of coverage as per today is okay for everyone. Yeah, it's okay for everyone. So I believe you learned something. I believe you learned something. So I think I may really not have so much unless otherwise. But I believe Leader Julius is around. Please kindly, you can unmute yourself also. Let me hand over briefly to you. And then I'll say the last word and then we close for today. Yeah. So, Leader Julius, are you around? Are you still on? Hey, I think no, they are not there. I'm the only one. I am the host. There's no co-host. Okay. Any other thing, Riv, before we can close? Anything else? Okay. So as we always say, the learning is in the doing. At least try and endeavor to always practice, yeah? You'll be practicing. Practice and practice and practice. And I would really suggest, you guys, when you join Royal Q, please put at the back of your mind, put as one of the priority to learn. Let me tell you, when you learn, the rest that happens with the Royal Q is history, is a walkover. I want to give you my own experience. You see, well, I am a trader. Particularly for me, purely I'm a trader. I don't do so much of marketing. And I believe for those who have known me for some time, I don't do so much of marketing. But I do once in a while, and especially those who are positive and are willing to work with me. I always do that. But then I'm purely a trader. I like trading because I know I got the ROIQ to simplify my trading journey. And because of that, I have realized there is money in trading. Too much money as well, just like it is in the marketing. Huh? But there's too much money in there. And it would be good for someone who is not so much into marketing like myself. You can make your money silently. I have done that several. In fact, people sometimes don't know that I trade. But you do your things, because there are people who really may not want people to know what they're doing. But life is good. Life would be good. So you just have to, if you learn some skills, trust me, you can make money anytime and anyhow. You can make money anytime you want, any time of the day, any time of the night. Just wake up, go into the market, look at how the market is faring, get a coin, trade, take your 2%, make your $10, $20. Breakfast is done, lunch is done, like school fees is done. Like any expense you're thinking of, is just a matter of going to the market. Go to the market, make trade entry, make some money, and then you're out. Go down and do whatever you want to do. That is how I do it, honestly. That is how I do it. I don't stress. I really don't stress. I want a heavy breakfast out, go and make my $10. I am out. I want to do something, pay school fees. I said this week, I promise, I actually give them a promise tomorrow I'll be paying the fees. So I know at night I'll make my $50. The following day, school fees clear. $100, 1-2 days, school fees is that. So you can think of any expense for as long as you have the capital and you don't spend extravagantly and work on building your capital portfolio. At least make some money, make some money, retain some for capital, and spend little from the profit made. Rarely should you spend from the capital. Make money, retain some, then spend. Make money, retain some, and then spend. So, and everything boils down to understanding the market. ROIQ is just a pathway to help simplify things for you. But if you understand, ROIQ becomes more easy and simpler. When I started in 2021, let me tell you, when Julius showed me the opportunity in 2021, I was doing my own little things, in the crypto area. But then when he showed me, he knows that very well, that we took almost about, I think I took more time into learning every little aspect of the market before I started, sharing and bringing people on board. The challenge we only have is that some people, they bring people on board and then they leave them. Okay. Why? Because for them, they didn't spend time to learn. And when they begin asking them questions here and there, they become too busy. They become unavailable, right? Having got the bonus. So it's good to market and get those bonus and build a team, but teach your people. Yeah. Teach your people, teach your downlines, teach your team, ladies and gentlemen. Otherwise, we shall end up at only bringing people. The year goes by, a robot expires, and the person leaves. The person will begin taking the opportunity as something that does not work. Yet, you would have not shown them the right way to do things. Okay? And also you who comes into it, don't think you'll be spoon-fed all the time. Sometimes it is self-sacrifice. Okay? Sometimes it is sacrifice. You need to go ahead and sacrifice. Have time. Learn. Go out. Okay? Because at the end of it all, it is your business, not the person who brought you. The person who brought you just showed you the path. Take it upon yourself to learn and own your business. Okay? And own your business. You will blame the person who shared with you the link. In one way or another, yes, they are accountable. But then, if you find it's not working, come on, go ahead and learn. There are different leaders, but you have very many leaders here who can help you, who can, hold you by the hand, and take you to the destination. Go ahead and do that. Okay. Otherwise, we shall be crying of floating laws. We shall be crying of this. Now we have opportunities here of learning every morning, some of you don't even take it serious. You prioritize whatever you're doing at the expense of learning. Yet skill is what lives with you forever. A job tomorrow, you can be fired. A job tomorrow, you can be fired. Personally, I am also in a working class. I work with an NGO, and I head a program in about 2 districts. Okay, but then I have time to teach. To learn. I have time for myself to trade. I have time for myself to do my stuff beside the work, because the work tomorrow, the contract can end. But then if you have the skill with you, trust me, anytime, anytime you can wake up, anytime you can do, even when you're relaxing, even when you've gone for leisure, you find yourself doing your thing. Okay? So that is just that. It's a tip for the morning, and I hope you take it seriously. Okay? Just take that seriously. This is the only business that will pay you forever. This is the only business that, because you're already part of it, don't quit. Make it better. Don't quit. Make it better. In my entire life, I am over 30 years. But in my entire life, I have never come across an opportunity of making money in the most easiest way, like it is in trading. It's the most easiest way. Sometimes what affects us is the aspect of greed. We want to make so much with little. But if you know your worth, if you know you know yourself, you eliminate some of those aspects of greed, and you cut your coat according to your shirt or cloth, then you're going to benefit and enjoy trading. If you have $100, if you make $2, $3, my friend, it's better than nothing. If you have $100, you make $5 a day, it is better than that. It doesn't go, you will never be the same. As long as you limit, you know how to spend, you will never be the same. Make $5 today, tomorrow make another 5, that's $10. Spend maybe $5 or $4. It's okay. Retain the other one. Let it keep on adding on the capital. Before you know it, in a month, you have $500. Before you know it, you have $600. And it will never go back. It will keep on building. Before you know it, you have $1,000. And then with $1,000, even if you make $20, that's almost like a single entry in a trade. Even if you make like $40, that's about like 2 entry in good signal after doing your analysis. It will never be the same. $2, $20, $30 in a day. There's someone who has not even got a cent of a dollar, but for you have made. So just do that. Don't overtrade. If you set your goal clearly, making $50 a day, and that is it. However exciting the market is, for me, $50, let me relax. Let me relax. Unless a really good trade opportunity presents itself, that's when it will enter again. But if not, let me relax. This 50 for now is okay. Let me first move around. Let me enjoy some fresh air. Maybe later on in the evening before I sleep, I'll make another entry. Just like that. You program yourself. Just program yourself. Okay? You'll be super. You'll be a super trader. You will enjoy trading. You will enjoy Royal Q. Okay? And by the time you bring someone, sometime the result will speak for itself. Okay, so I think with all those said, with a lot of words, I believe you can take a lift from those that I've said that you may think will work for you. And those that might have been saying wrongly, you can eliminate it, just let it be. Yeah, because we are here to learn and and grow as a community. Otherwise, I'm Coach Musa, and for today we may end here. And you join the next meeting, which I think will be led by other leaders, and then you keep learning. Yeah, you keep learning. You keep learning. Okay. All right. The questions are too much, but this person's hand is up. Crypto Bridge World, this user. Okay, we normally don't do this, but let me just do it. Let me just ask to unmute. User, you can unmute. User?
Yes, coach.
Yeah.
Okay, thank you for the nice presentation. But before you close, don't leave me behind. I am a bit confused. on a time interval. When you show that chart in a 4-hour time frame, it showed that something good is about to build up. But when it changed to 15 minutes, it showed that it has already built up, and you proceeded with the drawings. So my question is, what is the best time interval for us beginners?
For a
Because I
beginner.
was confused. We need a 4-hour time frame is about to build up, and in 15 minutes it has already built up.
For a beginner, this is my advice always, the people I share with. A beginner, for now, stick to one time frame. Stick to one time frame. If you want to work within the 1 hour time frame, analyze, make entry within the 1 hour time frame, and wait. If you want to use the 15 minutes time frame, you stick to the 15 minutes time frame. Why? Because there's what we call noises in the market. There is what we call those moments of waiting, which are characterized by, that the volatility, which brings about, the mini movements. If it is 1 hour, you will just see the bigger picture. If you go to 15 minutes time frame, the 15 minutes time frame is an accumulation of time frames to form the 1 hour time frame. I don't know if it makes sense. You have 15 minutes, then 30 minutes, then you can have very many candles of the 15 minutes, 15 minutes, 15. By the time it is forming 1 hour, that means there is mini movement to build up certain trend. So to avoid some of those confusion, just pick a time frame and stick to it. Okay? Stick to it. Then with the time, you can familiarize yourself with big time frame, then looking out for trade entry opportunities in lower time frame. But for now, as a beginner, stick to one time frame. If it is 1 hour, you pick a coin, you see that the market is not very clear, it is not making sense, leave it, go to another. Like the one I just picked, yeah? In the 1 hour time frame, it was showing something beautiful about to happen. Relax, stick to that. Wait for it to happen, enter. Okay? Then you enjoy, you just wait. Once you enter, relax and wait. Those are the mini movement which will happen in 15 minutes time frame, 30 minutes time frame. For you, you are not bothered about it. You don't want to know. It is okay. It is going to keep your pressure low, right? Because if you go there and begin seeing those movements, you'll see a moment where the market is as if it is going down and you're like, oh my God, it's going to go against me. Before you know it, you would have made a rational decision. You may find yourself closing trades in losses. Yet, if you had waited and kept your peace within that particular time frame you analyze the market from, you would still win. It will drop, yes, but it will finally get up. So those mini movement resulting from the volatility of the market is what sometimes causes panic, and then boom, you find yourself closing trades anyhow. So I hope you have answered your question. Just stick to a particular time frame first for now as a beginner. With the time, you can advance. Some of the things, you will learn them. I hope that is okay. Pastor Joshua? Okay, Crypto Bridge. Please, Crypto Bridge.
Wonderful. Thank you so much, Coach Musa. For me, it's a point of appreciation. I really love this, and it is helping us, of course, to guide our team members to learn the skills that is now transforming their lives. And now I call this financially transforming lives. Thank you, sir.
Thank you. You're welcome. I appreciate so much, Crypto Bridge. Yeah. Joshua? Pastor Joshua, is it Pastor Joshua? Yeah, in the next 2 minutes, we shall be ending maybe, if there's nothing else. Yeah, sometimes that's how, okay, for me, how I handle my sessions, I really prefer, I always want people to talk, yeah? More is more of interactive, yeah? So mine is quite always different. It's more of interactive session. I don't want to be like a teacher. I want to be more of I don't want to be more of like a lecturer. Okay, Pastor Joshua, if you have anything to say, if not, then I think we may end here for today. I had already given you the permission to unmute. I don't know. Mayanja Andrew. Okay. Andrew
Yes.
Mayanja.
Yes, thanks, Leader, for those insights. I just have a case study I saw. there's a coin called the I analyzed using the RSI. So the RSI, the blue line crossed the orange line, like you said. But when you analyze the candles, they are instead going down. But the RSI shows it's going. The RSI showed that it went up. So I don't know whether you can help me analyze that scenario briefly, because it's a bit confusing.
Which coin?
The
Oh, the
THE.
Yeah.
Yes.
Oh. Yeah, for those who want my number, I think I've dropped my number there. In the chat. Let me try to look at. Let's try to look at it together, just in the next 2 minutes. I believe. That. Okay. That. Let me see. Okay. That. Now you look at this coin. Even the 1.5% has been delivered already. Wow, this is serious. You see the 1%. We were just talking about small percent. The 1%. You see this candle. First of all, it appeared there was a red candle which was showing us that the price was going to go down. But what happened the next minute? There was a build up, and in fact, it gave even more than 1.5%. This was how many? This was almost like 2%. Woo! Knowledge is power. Oh shit. Okay, let's go and look for they. Let's look for they. They. Let me check for my they. So, what is the concern? Where is the lead? Is that leader there? Is the fellow there, or is the fellow there? Who asked that question? I didn't wanted him to repeat. Mayanja, are you still there? No, I think Mayanja is off. I didn't quite pick his question well. Hey, I have my namesake here, Coach. This is Coach Musa. Hey, I think that's nice. Hey, Coach Musa, I think. Let me hear your voice. Let me hear your voice. My namesake. Can you say something, Coach Musa?
Hello, good morning, sir.
Good morning.
Can you hear me?
Yes. Coach Musa from where? Uganda?
Yeah, from Uganda, Ginger. Yeah.
Yeah. Nice to see you.
Oh, thanks.
I hope you're doing a great work in coaching.
Yeah, I have just joined last month.
Yeah. Okay.
Yeah.
All right. That's fine. That's really good.
Okay. Thanks for the great opportunity.
It's a pleasure.
Okay.
Yeah. So let me just. I don't know whether someone understood what the other fellow had asked. This coin here, you see the challenge with some of these new coins. People pump them. Some people buy them in the pre-market period. And of course, when they get listed, people tend to sell a lot and then the price dumps very badly. That's the challenge with these newly listed coins. They're good, but trading them also is challenging sometimes. You tend to dump them so much. So you see, tend to dump them so much. These newly listed coins they're not the best for trading most of the times, unless otherwise. But it's okay. Let's we believe this coin. Mm. Okay. This day coin may still dip. It may still dip, but it will eventually come up because in the one day it is still indicating serious movement, serious downward movement, and then yeah. These new coins here. It's serious. Very serious. These new coins here. It will still drop. Mm-hmm. Yeah. Okay. It will still drop. This coin, you just leave it alone. You relax and leave that coin alone. You first relax. Or you can, if you are trading it, you can open more margin calls. Yeah. Like up to about what 40. Up to around 14% drop. That is when you're taking consideration to this last support that caused a reversal. But yeah, this that caused this movement can drop up to that. But in the look of things, it's not good. It's going there. But first open up to that, distribute it, and then you see what happens. Okay. I think there's no more question here. The last chance just to sham. I saw Coach Mopiwa around. Yeah. Shooty. Our time is up. Alice. Shooty. Is this Shooty? Chami, Shooty. 1 minute each. Chami?
Coach, good morning.
Good morning.
Coach, I'm failing to put these lines down. The RI
Sorry?
is on trade view. On the trade view.
I'm not getting.
I'm failing on the trade view. I'm failing to put the RI, the RSI, the indicator on the indicator. Like I'm failing to install them, to put them on the screen. I don't know how. Maybe you can show me how they can put them.
Yeah. Okay. That's okay. Samuel Robert?
Thank you.
Mugabe.
Yes, a very good morning to you, Coach.
Good morning.
Thank you for the great work. My question is, I've seen you do your analysis in the 1 hour time frame. All I'm asking is that could one at least focus onto the 1 day time frame to look at the progress of this coin, whether it's on a downtrend or an uptrend before entering in these other time frames of 1 hour or 15 minutes? That's my question.
That is also possible. However, you see, it is possible. However, why sometimes, personally, why I like the 1 hour, 15 minutes, I am one person who do not want to stay long in a trade. So I take advantage of smaller movement, 1.5%, 2%, to just make profits. So if I can take 2%, 1.5% repeatedly 3 or 4 times, I think I would have made some good money than someone who wants to look at the bigger time frame and wait for 10%. So the bigger time frame paints a picture of the long-term event, like something to happen. Because now imagine you have a candle that is running. You only have one candle. That means for you to make trade entry opportunities, you have to wait for this candle to close up to like tomorrow. Then another one begins forming. Then now you begin making decisions. That means you would have not traded it. Yeah, but there are a lot of things that happen within smaller time frames that you can take advantage of. Okay, so I don't. Okay, that is me. But if you feel comfortable with it, it's okay. But for me, my best time frames for analyzing the market is 1 hour. Then my best trading time frame is 15 minutes. 15 minutes, sometimes 5 minutes, by the way. I take 1.5, 1.3%. That is okay. That is my own way. You can also have your own way. But to me, it's the best. Yeah.
Okay, sir.
Okay, I think you're welcome. I think we may end here for today, ladies and gentlemen. May end here for today. Let's catch up tomorrow as we look at the next. Coach Mopiu, I saw you around. Are you? Or you disappeared? Would you raise your hand if you're there? If you're not there, then we can end. Coach Mopiu, I saw you around. If not, okay. See you tomorrow, ladies and gentlemen. Nice having you guys on today. That's same time tomorrow. So we may have this running for this week. I don't know, maybe next, if I'm available next week, then I'll be there. But if I'm not, probably another person will take over. Yeah, I will also be concentrating other things and also on my team. Yeah. Okay.